Taxes are the lifeblood of any nation, funding essential services and infrastructure that drive progress. In India, a developing economy with ambitious goals, a robust taxation system is paramount. Understanding this system is crucial for individuals and businesses to meet their obligations and appreciate its role in shaping India's economic landscape. Taxes in India are broadly categorized into two types: direct and indirect taxes. Direct taxes are levied on the income and profits of individuals and corporations, directly impacting their earnings. Indirect taxes are levied on the consumption of goods and services, ultimately borne by the end consumer. The Indian government utilizes tax revenue to fund a wide range of public services, including education, healthcare, infrastructure development, and national defense.
Direct taxes are levied directly on the income of individuals and corporations. Income tax, the most prevalent direct tax, applies to individuals earning above a certain threshold. This tax is progressive, meaning that those with higher incomes pay a larger proportion of their income as tax. Corporate tax is levied on the profits of companies incorporated in India. The corporate tax rate is uniform for all companies, regardless of their size or industry. The Income Tax Department, under the Ministry of Finance, is responsible for administering and collecting income tax. Taxpayers are required to file their income tax returns annually, disclosing their income and claiming applicable deductions and exemptions. Direct taxes play a critical role in generating revenue for the government, funding essential public services and infrastructure projects.
Indirect taxes, levied on the consumption of goods and services, form a significant portion of India's tax revenue. The introduction of the Goods and Services Tax in 2017 marked a transformative reform in India's indirect tax system. It subsumed a complex web of multiple indirect taxes levied by the central and state governments, creating a unified national market. Under the GST regime, goods and services are categorized under different tax slabs, with rates ranging from 0% to 28%. Essential goods are either exempt from GST or taxed at lower rates, while luxury goods and services attract higher rates. The GST Council, comprising representatives from both the central and state governments, is responsible for setting tax rates and making amendments to the GST law. The implementation of GST has simplified the tax structure, reduced compliance burdens for businesses, and fostered a more business-friendly environment.
Compliance with tax laws is paramount in any functioning economy. In India, both individuals and businesses are required to fulfill specific compliance requirements to ensure transparency and accountability. One of the primary compliance requirements is filing tax returns. Individuals earning above a certain threshold must file their income tax returns annually, disclosing their income from various sources, claiming applicable deductions and exemptions, and paying any remaining tax due. Businesses, similarly, need to file their tax returns, providing details of their income, expenses, and tax liabilities. In addition to filing returns, businesses may also be subject to tax audits to verify the accuracy of the information declared in tax returns and to ensure compliance with tax laws. The Indian government has taken several measures to simplify tax compliance, including the introduction of online tax filing portals and promoting digital payments for tax dues.
Recognizing the importance of fostering economic growth and attracting investments, the Indian government offers a range of tax incentives and exemptions. These are designed to incentivize specific activities, promote certain sectors, and encourage overall economic development. Tax holidays provide complete or partial exemption from corporate tax for a specified period, typically for new businesses or those set up in specific industries or locations. These holidays aim to attract investments, boost job creation, and stimulate economic activity in targeted sectors. Deductions and exemptions are also available for investments in specific instruments such as infrastructure bonds or tax-saving mutual funds. These incentives encourage individuals to save and invest, channeling funds towards infrastructure development and other priority areas. The government continuously reviews and revises its tax incentive policies to ensure their effectiveness in achieving the desired economic outcomes.
The Indian government has undertaken significant reforms in recent years to simplify the tax system, enhance transparency, and improve ease of doing business. These reforms aim to create a more stable and predictable tax regime, fostering investor confidence and promoting economic growth. One of the most significant reforms has been the implementation of the Goods and Services Tax, or GST. This landmark reform subsumed a complex web of multiple indirect taxes, creating a unified national market and significantly simplifying the indirect tax structure. In addition to GST, the government has also introduced several measures to simplify income tax. These include reducing corporate tax rates, rationalizing personal income tax slabs, and introducing a simplified tax return form for individuals with simpler income sources. The government has also taken steps to leverage technology to improve tax administration, including the introduction of online tax filing portals and enabling electronic filing of returns and online payment of taxes. While India has made significant strides in reforming its taxation system, challenges remain in ensuring its effectiveness, fairness, and efficiency. Addressing these challenges is crucial to building a more robust and equitable tax system. One of the key challenges is the complexity of the tax laws and regulations. Despite simplification efforts, navigating the intricacies of the tax system can still be daunting for individuals and businesses alike. Another challenge is the prevalence of tax evasion. While the government has taken steps to curb tax evasion, such as implementing stricter penalties and leveraging technology for better monitoring, it continues to be a concern. Embracing technology further, simplifying tax laws, and fostering a culture of voluntary compliance are crucial steps towards building a more robust and equitable tax system. Taxation plays a pivotal role in any nation's development, and India is no exception. A fair, efficient, and transparent taxation system is essential for mobilizing resources, funding public services, and fostering inclusive economic growth. India's journey of tax reform has been marked by significant milestones, from the introduction of the Goods and Services Tax to the implementation of digital taxation measures. These reforms reflect the government's commitment to simplifying the tax system, enhancing compliance, and adapting to the evolving economic landscape. However, the journey is far from over. Continuous reforms, stakeholder collaboration, and a focus on technology-driven solutions will be key to unlocking the full potential of taxation as a tool for inclusive growth in India. By fostering a culture of tax compliance, simplifying tax laws, and leveraging technology, India can create a tax system that is fair, efficient, and conducive to sustainable and inclusive economic growth.